stock sell-off on Wall Street following muted earning guidance from retailer Walmart. The S&P 500 retreats from record levels. The Nasdaq is the top loser with cuts of about 1%. Asian markets trade largely lower as Wall Street closes lower and uncertainty lingers over US President Donald Trump's tariff strategy. The gift nifty is also suggesting a lower start for the Indian market. Gold prices hit a record high as safe haven buying sustains on uncertainty over President Trump's tariff threat. Crude prices rise for the third straight day with Brent above $76 a barrel. After a prolonged battle with investors and ousted Religare chairman Rashmi Saluja, the Berman Group acquires control of the financial service firm Religare. The Bermans are the new promoters following the completion of open offer, which has resulted in them holding over 25% stake in Religare Enterprise. Walmart-backed PhonePe is gearing up to go public in India but stops short of announcing a timeline. PhonePe was valued at $12 billion as per the last funding round in January 2023. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. Thank you so much for tuning in this morning. And what we are seeing in terms of the Asian markets, let's start with that because Asian markets have opened up a bit mixed. Taiwan index is holding on to gains of 0.6%. We're seeing Hang Seng that is holding on to gains of 1.8% as of now. So almost 2% in trade today. We have ASX 200 that is a bit muted. Shanghai is a bit muted in trade, while Nikkei is also holding on to gains of 0.1%. So largely, we're seeing a bit of a mixed opening is what we could say coming in this morning. Wall Street was a bit subdued in trade and everyone was keeping an eye out on that inflation data from Japan. Trump tariff, that continues to be a concern in the Asian markets as well as across the globe. But that's what we're looking in terms of the Asian markets. Nifty implied open, let's look at that. And what is that suggesting? That's suggesting a decline coming in for the Indian markets. 90-point downtick is what it is suggesting for the Indian markets as of now. Nifty implied open, a negative start is what we are watching out for from the Indian markets. But like I was saying, let's take a recap of what happened in terms of Wall Street. That ended lower with Dow Jones shedding close to 450 points. S&P 500 that slipped 24 points while Nasdaq dipped 94 points in trade. This fall came in and was mainly led by Walmart, which slipped 6.5%, and this was after the retail giant actually warned that its profit growth might slow down. The chief financial officer also highlighted that the company will not be completely immune to tariffs imposed on Mexico and Canada. A slide in banking stocks also affected the Dow Jones, with the JP Morgan and Goldman Sachs falling close to 4% in yesterday's trading session in the US market. Now, let's move on and talk about the worries of the policy changes in tariffs as well as tax cuts build up. What are market experts actually saying? Market experts are reflecting on how the new policies could affect the US equity markets and the economy going forward. Listen in.
I think we're still in the environment where investors, CEOs, individuals are trying to assess the actual details around a variety of policy elements, around taxes, around government spending, as well as the flow of goods and talent. And so for now, we're really counting on the momentum that the economy and earnings had going into this year, which was a good one. We still expect around 2.5% growth, and we do think double-digit earnings growth is feasible this year, which is still a good environment for risk. But in terms of managing the decimal points of all of the major macro factors, we definitely have to have a lot more details on these policy aspects.
I mean, we walked into this year thinking that we were going to have some positives for growth in terms of both deregulation and ultimately tax cuts, but that would take a little longer, and that we would have some risks presented by both tariffs and if we were to get some sort of extreme immigration policy with a lot of deportations. Those still exist, but there are a lot of unknowns around exactly how, what the depth and breadth of the policies will be, the execution. We've also added in there DOGE. Because that could create significant headwinds for the economy.
The market, I think, is going to key much more off things like deregulation policy, smaller federal government, and some of the disinflationary policies that I think Scott Bessent spoke about recently, where he thinks we're going into more of a Goldilocks policy style for this administration. That's what I think the market's going to focus more on. I know we get hung up on tariffs. I know we get hung up on immigration. They certainly have stagflationary tendencies. The question is magnitude. How big are they relative to the positives of stronger growth and lower inflation that comes from deregulation? We've had pretty good runs in the equity market in 2023 and 2024, and the Fed was not really giving us rate cuts during that time. In fact, in 23, they were raising rates and the market did great. So I just don't think it's a prerequisite.
Okay, that's all the global market action that we have for you all this morning. But how will all this impact our Indian markets? We have a team of researchers joining in with us to set you up for trade as well as tell you which are the important stocks to watch out for. Let's go across to Vamakshi, who's here to tell us and set us up for today's trading session. Good morning, Vamakshi. What are we watching out for in today's trading session? Seems like a bit of a negative start, at least is what the implied open is indicating.
Well, absolutely, Vinny. In fact, when you look at the markets yesterday, the broader indices continued to outperform the benchmarks. We saw Nifty mid-cap as well as the small-cap index gain over 1% yesterday. And top gainers included companies like Godrej Industries, Rajesh Exports as well as NetApp. All of these counters had a very good trading session yesterday. On the other hand, when we look at the Nifty, it continues to consolidate over the last 4 sessions. It did manage to recover from the initial lows that we saw. It bounced back, but it managed to still hold on to that 22,900 mark. As far as themes are concerned, yesterday again was a day of stock-specific action. Nifty Metal was the top sectoral gainer. We also had the Nifty PSU banks, which was up and away in the trading session yesterday. Bank of India, Punjab Sind Bank, as well as PNB. All of these counters were flying away in trade yesterday. Capital market theme stocks continue to be in focus. We had BSC surge 8% on the day before, and yesterday as well, the stock was up somewhere around 4 to 5%. Angel One, KFIN were some other counters that were buzzing in trade. As far as the US markets are concerned, all 3 indices ended in the red. The US markets retreated from the previous session, and that is because there was disappointing guidance from Walmart, which sparked some concern around the health of the consumer. As far as the trading session today is concerned, we will be keeping an eye out on RBI's MPC meeting minutes. India's S&P Global Manufacturing as well as Services PMI data will also be made available today. Same for US. We'll also be keeping an eye out on Quality Power. The company is expected to list it on bourses today, so watch out for that. As of now, when we look at the handover coming in from the US markets, it's not positive, and the GIFT Nifty too is indicating a negative start to the trading session today.
Okay, Vamakshi, thank you so much for that. But let's get across to which are the important stocks to watch out for in today's trading session. Let's start with Cipla. A couple of news flows coming in here. One, they've gotten a US FDA approval, and this is for a new drug that is nilotinib capsules, which is used for the treatment of chronic myeloid leukemia, which is expected to be launched in 2025, 2026 in the US market. It's a new drug. So yes, there is an opportunity to grow on this front. But they have received a US FDA issue has come in for 2 observations for its testing facility. This is in Navi Mumbai. So 2 observations is what they have received. Keep an eye out on that. Not a major impact coming in, but that is something to watch out for. Other than that, we also have Narayana Health that's in focus. Now they have laid foundation for 1 more hospital in Kolkata. 1,100 beds is what they're looking out for. This will be laid down over a period of 3 to 10 years. The initial investment they're making is 900 crores for the first phase of investments and first phase of release coming in and commercialization. Religare Enterprises, keep an eye out on that one. Berman family has acquired controlling stake in Religare Enterprises after the completion of open offer. Well, Norton, that's also in focus. They have appointed Venugopal Shanbag as the managing director of the company with effect from April 2025. JM Financials got a tax refund of 230 crores for assessment year 2008-2009, so could see some positive move coming in. NDPC Green Energy signed an MOU with Bharat Light and Power for pacing green energy objectives, so that should be in focus. RVNL's consortium with HFCL as well as Aerial Telecom Solutions has signed a project implementation agency agreement with BSNL. CIE Automotive, while we are seeing the profits of the company are up, the revenues are seeing a decline of 5.8%. Margins have seen a contraction of 40 basis points, so we could see a bit of a move coming in for CIE Automotive. And those are the important stocks that you should be keeping on your radar today at 9:15 a.m. when when they open up in trade. But on that note, we're going to slip into a very short break. And after the break, we'll come out and come back with what sources are telling CNBC TV 18 about the government weighing on lower duty of electric vehicle imports. Details on the story after the break. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's move on to the big story. The government will soon open applications for a scheme to promote production of electric cars in India. Sources tell CNBC TV 18 that a concessional import duty of 15% will be offered if companies meet the scheme's eligibility criteria. Parikshit is joining in with us to give us more details on this one. Parikshit, tell us more about the government scheme.
The central government will soon invite applications under the scheme for promotion of manufacturing electric cars in India, which will give global OEMs a 15% concessional duty as opposed to 70% currently. This scheme was announced in March last year, and the government has been holding consultations with the industry on implementation guidelines. The Ministry of Heavy Industries, which is the nodal ministry in charge of this scheme, has now prepared draft guidelines for feedback. The guidelines will soon be notified, and sources say government could open the scheme for applications in late March or early April. Sources say investment in both greenfield and brownfield projects would be eligible, but the amount of committed investment, that is $500 million, would be mandatory for both greenfield and brownfield projects. Companies can spend 5% of committed investment on charging infrastructure. The company must achieve a minimum revenue of rupees 7,500 crore by the 5th year of operation and 5,000 crore rupees by the 4th year of operations. The applicant will be fined in case it fails to meet the revenue criteria, and the fine can be in the range of 1% to 3% of the revenue shortfall. An interministerial sanctioning committee would be formed for approving and monitoring the implementation. Sources have also told us that Tesla has not participated in any recent stakeholder consultations regarding electric car manufacturing scheme. The government has received representations from almost all global and domestic OEMs, but not Tesla. However, this scheme will be opened within weeks, and the government is hopeful that Tesla will apply, and so will other OEMs. Among the other known criteria, the committed investment has to be rupees 4,150 crore. The scheme would apply to cars costing $35,000 or rupees 30 lakh and above. This is the cost of a shipped vehicle without the addition of duty. If approved, a car maker would get 15% duty on 8,000 cars per year, but the company must start making cars in India by the 3rd year of operations and achieve a domestic value addition of 25% in 3 years and 50% value addition domestically by 5th year of operations. Now, according to estimates, if a company received an approval under this scheme, then a $35,000 imported car would cost an Indian customer around rupees 36 lakhs, and an imported car costing $50,000 would cost an Indian customer around rupees 52 lakhs.
Thanks so much for that. But let's move on. Walmart-backed PhonePe is gearing up for a potential IPO in India. But the payment firm has not specified a timeline for the listing. The company says it has established a clear corporate structure with each of its non-payment business classified as fully owned subsidiaries. CNBC TV 18 spoke to PhonePe's co-founder Samir Nigam at the Global FinTech Fest in August last year. And when asked about the IPO plans, Nigam was nervous about the proposed 30% limit on UPI market share. But in December last year, the NPCI deferred the deadline to impose this 30% limit to December 2026. Listen in.
As far as going public, the market cap overhang is definitely a problem for us, right? I mean, I feel nervous going into the market if there's a 30% market cap lurking or looming, and going and asking retail investors to put money against today's market cap. My concern is whether we do right by our shareholders. So I think one thing, actually at PhonePe, we've always prided ourselves on is every single round from a Series A onwards, everyone's seen considerable multiples as far as return on capital.
And let's move on. Crompton Greaves Consumer Electricals introduced two new tech platforms, Nucleus and X-Tech, aimed to enhance energy efficiency, performance, as well as reliability, reliability of its products. The company's MD and CEO Promit Ghosh says that they see better times ahead for the acquired brand Butterfly. Also talks about a bunch of new products that are in the pipeline for the company. Listen in.
We are looking forward to Butterfly turning the corner insofar as the growth trajectory is concerned, and profit trajectory you already see. The turnaround has definitely taken root, and so we do see better times ahead for Butterfly. There will be product categories that we are not currently in that we will start to sell, but also better and closer to the consumer heart. Suffice it to say that we are working on a bunch of products. Right. Not only products which are already available in the market, but taking those products and trying to see how we can come up with something that is different. Yeah. Yes, you will see us entering some of the large market segments where we leverage the Crompton brand, the Crompton distribution, the Crompton service, but also come up with a product.
Okay, on that note, we're going to step into a very short break. Up next, we'll get to what's happening in the world of commodities, so don't go anywhere. Welcome back to Power Breakfast on CNBC TV 18. Now let's go across to Manisha, who's waiting by to tell us what's happening in the world of commodities this morning. Good morning, Manisha. Crude continues to rise. Gold is also rising. What else are we watching out for? What are we seeing in both these commodities?
Well, yes, let's start with crude oil prices first. And third straight day of gains, and we've seen prices gain up by 2.5% in this week. U.S. gas and distillate stocks have seen a decline, and that has been supportive. Markets also are taking support from Russian supply disruptions, and also the U.S. cold has led to some pipelines freezing there, also leading to disruption in the flow of the oil, and that has been weaving into the prices there. But it's not just crude. When you look at the gold prices, while we did see an all-time high of $2,955 an ounce, we are trading at around $2,940 at this point in time. But even with this very slight profit-taking in prices, we are headed for 8th weekly gain. Fears of global trade war is keeping prices supportive. We've also seen in the overnight markets and in this week as well that you have seen gains come in for steel, iron ore, aluminum, and copper prices have seen a bit of a gain as well.
Okay, Manisha, thank you so much for that. But with that, we're absolutely out of time in this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.